this is something we've been tracking for some time. And so from an MEOG perspective, we're very focused in, basically providing access to institutional investors into this asset class. So in terms of private debt space, we've seen that grow pretty dramatically over the last couple of years. The way that it benefits is to the points you've just made, right? Banks will have potentially a different set of objectives, versus an institutional investor like a life insurance company, right? Who's looking for long-dated assets, stable cash flows, pretty defensive due to basically asset liability match. So in that respect, I think it brings into play some interesting solutions we can deliver versus what the bank market can deliver. So longer tenor, potentially a little bit more flexibility, etc. That's the first part. The second part I would say is looking at potentially where these investors can play in terms of the capital structures. So definitely a lot of investors can play in the senior debt space. But there are a number of investors that we cover as well that can play further up the capital structure, be it MES or sub or holdco type financing. So again, it presents us an opportunity to structure interesting solutions for our clients that the bank market may not necessarily be able to access. I think the challenge in the past is around critical mass. There were definitely investors that were there. But as I kind of roughly add up, our top 20 institutional investors that can invest in infrastructure, in senior and MES, the top 20 investors represent very roughly, a potential liquidity pool of $1 billion. So if I look back when I was tracking this, 5 years ago, that pool would be significantly smaller. Now that's a total pool, so clearly not all that, is deployed all in one go. But it gives you the sense of the potential depth of the market. So I think this, in a thematic perspective, is a pretty interesting thematic that was very obvious in the leveraged finance market. So we saw that market basically evolve a lot faster in terms of delivering institutional solutions. We now are seeing, for all the reasons we've just talked about as to why infrastructure is attractive, we're seeing institutional investors likewise being actively engaged in trying to invest in this asset class. Historically, it's been expressed through the small number of project bonds that have been done, so through the capital markets, publicly issued, rated. That's definitely still an option. But the private debt space has allowed institutional investors to express that view in loan format or private debt format. So I think this is a pretty exciting development for us.